All right, hello, good morning, good evening, and good night to all investors. I hope you guys are doing absolutely fantastic. Today, we're going to be talking about how to grow a small account. If your account is starting at $0 or $100 and you want to be up in that $20 million range, we're going to go through that today. You don't have 50 years? That's okay. I don't have 50 years either. So we're going to look at some solutions to grow your account faster at the start. I just want to show you so we could be like somewhat relatable. I have an account balance of $5,300. Some of you might not even have $5,000, and that's totally okay because we all started somewhere. I started with nothing, you're going to start with nothing, and you're going to build it and grow it from there. But before we get into this video, what I want to say is we are now up to 148 subscribers. I'm actually recording a second video today. So we were at, I think, 138 subscribers in our previous video. Now we're up to 140. As you can see, we are a growing page. If you haven't yet subscribed, please do so. But without further ado, let's get into this video. So when starting a small account, we're going to start with $100. Let's say we're investing for 30 years and we just add $100 every year at the market return, we'll say 7% interest rate. And what do we get? After 30 years, we get an amazing not $114,114. That is pathetic after 30 years of investing. I don't know about you, but if I was investing for 30 years and only gained about $100,000, I would not be investing. Growing a small account balance is difficult if you don't have the money to invest. And what I would say to that is in growing a small account, it's important to have stocks with, I think, high yields in order to really boost this rate of compounding. For example, I want to look at JEPI. So in this example that we just showed, we had $100 we started with. We're contributing $100 a month for 30 years at a 7% return. Now, what if we took that 7% return and made it an 11.45% return? Let's just see what happens here. And then we're going to calculate. So our $114,000 jumps up to $226,000. Do you notice how we didn't double the yield, yet we doubled our money? Well, better yet, what if we bought something like SMHB? And as you can tell, I'm trying to use stocks that I've not shown you guys before, just so that, you know, I'm not always going to the same old Tesla, the same old clip, USOI, whatever it is. So let's search up SMHB, which is a 2x monthly pay leveraged US small cap, high cap dividend stock, whatever it is, ETN. Yada, yada, yada. ETNs are a little more risky than ETFs. I'm going to make a video on that soon. But this one pays out a 30.32% dividend yield right here. So let's put that in. After 30 years, this one's going to be a big one. 30.32% dividend yield. What do we got? We got 11 million from just investing $100 every single month. Now, a stock that you guys probably already know, a yield max fund, NVIDIA, which writes synthetic covered call options on NVIDIA. This one has a dividend yield, I'm pretty sure about 37%. It doesn't have anything currently in its dividend yield, but that's okay. We're going off that 37%. So changing the 30.32 to 37, calculating that over 30 years, we get $42 million. I don't know about you, but I could definitely use $42 million. Now, the crazy part is, what if we just took this monthly contribution and added an extra zero? How does that sound? So $1,000 a month. If you're working a job making about $5,000 a month, sure, you got your rent, you got probably a car. If you're able to set aside $1,000 a month at a 37% interest rate, this is a massive, massive interest rate. I know you guys are saying probably, who's going to get that return every single year? Well, NVIDIA pays that dividend, and Tesla pays an even higher one, and so does Clip. Sure, they might not be able to sustain that for 37 years, but I'm trying to motivate you guys here. I'm trying to show you how much you guys can actually receive. And if you were to put in $1,000 a month, starting with $100 over 30 years at 37%, you'd have $411 million. I don't know about you guys, but I think you guys could buy a pretty nice house, a lot of freedom, and whatever you want with $400 million. That is incredible. But you know what? You might be saying, okay, look, we're talking about growing a small account fast. I don't have 30 years, okay? What about just 5 years of investing $100 and an extra $1,000 every month at a 37% return, what would we have? We'd have $120,000. Sure, it looks like we're going to invest about $60K, but that's doubling our investment. So that's not too bad for a rate of 5 years. What else could we do here? What if we notch this down and we notch this up to 10 years and we put in Tesla's insane 63% dividend yield? Because honestly, you could get a better dividend yield if you buy Tesla at a better price. But we're going to go with what it's going at right now, 63%. And just in 10 years, you'd have $1 million after only investing about $60K. Notice how your initial investment didn't change, but because you had a higher rate of interest, you made a lot more money. That is how you could grow a small account. You can invest in whatever you want. You can invest in JPI, the JP Morgan Equity Premium Income ETF, which pays a dividend of 11%. You can invest in SMBH, which pays a dividend of 30%, or NVIDIA, which pays a dividend of 0, just kidding, about 37% currently. I also do have Coca-Cola stock just to show you the difference. At a 3% return, for example, sure, Coca-Cola does appreciate in value, but it's more of a premium fund, and that's, you kind of pay a price for that. It's like almost like a bank account, even though it's not a bank account. It collects interest, but it's just very slow. It doesn't compound your money like these ones really could. So at 3%, man, you're barely making any money. You're making $8,000 over 10 years. That's nothing compared to your 63%, which is like 1.2 million. Come on now, guys, that's crazy. So this was just a little video on how to grow a small account. What I do think is if you do have a small account, start to set aside money every single month to put in and invest. A small account on no money invested, even at a 63% interest rate, is going to take a long time to grow, as you could see. Sure, your money might compound with that high interest rate, but at the same time, you got to be adding to that account every single month in order to build it up. I hope you guys did enjoy this short little video. Please do subscribe to the channel. Check out our other videos, as we're always a growing page. So please do not hesitate to join our page and join our community. Comment, as we have amazing people commenting on our posts every single day. I love you guys. I appreciate you guys for doing that. And I just want to say thank you. Have a blessed day. And I will see you guys in the next video. Take care.